Do you want a simple, proven trading strategy that works in Forex, stocks, crypto, commodity, and indices? In this video, I will show you Larellian's 1 to 3 reversal pattern, a powerful technique that's easy to learn, highly effective, and has been used by some of the most successful traders in the world. Stick around because by the end of this video, you will know exactly how to spot and trade this pattern like a pro. Hey traders, welcome to Traders Endgame. In today's video, I'm going to show you one of the most profitable Larellian's strategy, which is called 1 to 2 reversal pattern. This pattern has been proven to be one of the most profitable patterns you have ever seen in the trading industry. So this pattern is a simple but powerful strategy designed to help you to spot a market reversal with a precision. This pattern can be used in crypto. Forex, stocks, commodity, and indices. This pattern works in across all markets because without you having this trading 1 to 3 reversal pattern, you don't know how to trade, because this 1 to 3 reversal pattern is one of the most highest reversal pattern. It's all about understanding price actions and market structure, like I said, and it time your trades for maximum profitability and let you break it down step by step. So I will show you how it works. Now let me quickly show you how this trend is being used in the bullish setup. First of all, let me show you when price is going up on the higher time frame. Like this can be the 1 hour, this can be the 4 hour, this can be the daily, whatever time frame you are. We are looking for a bullish setup at this instance. The first thing that will come to your mind is that where am I going to look for this reversal? It can be depends on your choice. How you are going to look for this trend reversal. So imagine price is going up on the higher time frame, and sometimes you can notice that maybe on the 5 minutes or the 15 minutes, you notice price is going downward, making a lower low, making a lower high and a lower low. So what happened? You understand that when price try to, it's not going to break this high first, which is the lower high. Price is going to create a move, which is a high. It's going to create a move down, and this move down is not going to take this present low liquidity, and before you know, at this swings here, and what do? You just look for a simple candlestick that close above the previous high, and you just target target at least either 3 to 1 or 2 to 1, depends on your choice. You see how it being used in the bullish setup. So this is a bullish setup. Same thing also apply to this on the, let me show you, same thing also apply to this on the bearish condition. So when price is making a lower low in the market, maybe on the higher time frame, depends on your choice. So and price is giving you a lower low in the market. The first thing that will come to your mind is that what are you going to do? First of all, for we to look at how this pattern is being used in the market, we have to understand that this trend can be on the 1 hour, can be on the daily, can be on the 4 hour, depends on your choice. It's going downward. The first thing you are going to do is to make sure that the price on the 15 minutes or maybe on the 5 minutes, which you are going to use for the timing, price is going to just create a bullish move upward, creating a higher high and a higher low. So once price creates a higher high and price creates a higher low, so what do you notice? When price try to break this previous high, it's going to be impossible. Price is just going to retrace a little bit. After price retrace a little bit, remember this previous swing here, it just needs to retrace a little bit, and break out these swings. And if you notice that when price break out these swings, what do you do at this instant? You notice that price break out this previous low, and your aim is just simple, simple and precise. Enter at this point. You can target, you can place your stop loss at the a previous breakout and just target at least 2 to 1 and you eat your profit. So do you see how this strategy is being precise? So let me show you this on our chart. This is our bullish example on the USD card, and it happens on 27th December 2024. So let me quickly just show you how this pattern work before I show you example. When price creates a leg, and when price creates a leg, which is going to be this in the Elliott wave, because I could not be able to find 1 to 3 pattern 1 to 3 wave here, so that is the reason why I'm using A. So it's up to you now to use the same thing like mine. So on the zero leg, when price creates a 1 reversal, you are going to expect price to create a B reversal, which is retracement to the upside when you are looking for a bullish, when you are looking for a bullish setup. So after that, you notice that this C cannot be able to, the C leg cannot be able to take out this A leg, which we understand earlier. And what do? You look for a breakout above this B, which is called the number 2 reversal. This A is 1, this B is 2, and this C is 3. 2 and this C is 3. Once price take out this B leg, which is the number 2, a stop loss at the swing of the B, or depends, you can put it at the A swing low, and you target at least either 2 to 1 or 3 to 1, depends on your choice. So let me quickly show you this on our chart. However, before you are going to be using this pattern, you have to put something in mind, that either you are looking at it as a means of trend reversal. Maybe you want to use this strategy. You must know that you have to use it with the higher time frame. The higher time frame, it can be order block, it can be whatever time frame of your choice. Once price hits the order block, what do? You have to look for the 1 to 3 pattern, which is this pattern can be used in either liquidity or using it in order block. So once price creates a low example, and you notice that this is a lower low, this is a swing, short-term swing high, and price take out this swing low. This is called the A leg, which is the 1 swing reversal pattern. Immediately price creates a swing high, which is the B, and what do? And price retrace a little bit, and what do? And it's going to be a breakout at this B. Remember, I told you that this A is 1, this B is 2, and this C is 3. So you have to do it, you have to enter the market before short-term swing high is being broken. So you'll notice we quickly place our stop loss here, and we set our profit target to 3 to 1. You notice this is target to 3 to 1. You notice this is one of the bullish setup on the USD card on the Forex. So let's quickly look at our gold on the commodity. Before I make it earlier again, you have to know that price is going to create a lower low in the market before you look for a trend reversal. This is 1 to 3 trend reversal, like I said, in the market. So you have to make sure that price creates a lower low in the market and price take out the swing high. So let me show you. When price take out this swing low, it creates a lower low. What happened? You know that, imagine you are going to look for a trend change at this place, you are going to lose a lot. So this is the reason why the Lawrence trend reversal pattern, which is 1 to 3 trend reversal, is very powerful. It's very powerful, guys. So careful trend reversal, because it's very powerful if you understand how it's being used in the market. So a swing high, notice that price retrace on the C leg, but it could not be able to take out this our swing low, which is the A. And what do you notice? You notice that there is going to be, you are going to wait for at least a breakout at this swing high. before you look for any other buy setup. So when price take out this swing high, you have to quickly enter the market, place your stop loss at this instance, and you just look for either 2 to 1 or 3 to 1, depends on your choice, and you are good to go. Are you seeing it? Do you see how this strategy is being used in the market? This is one of the most profitable setup, which is called the trend reversal, the 1 to 3 trend reversal on the Laurelian setup. So you can be able to use, imagine this, you cannot just use this trend reversal alone, you can other higher time frame. So let me quickly show you other example on our chart. Now this is our first example on the bearish setup. AUSD, which is the Australian dollar. This is a Forex pair. Like what I told you, that you have to wait for price to create a higher high in the market. If you can see on our chart, price creates a higher high, like what I'm seeing here. This is a high. This is our A. Like I said, what do you notice happened? Price creates a swinger low, but what happened? Price could not be able to take our swinger high, which is the number 1 leg, and price retrace a little bit. And what do you do at this point? You have to make sure that price take out this B leg, and once price take out this B leg, you place your entry at the breakout of the candle, and you look for either 2 to 1 or 3 to 1. So do you understand what I'm saying? It's very precise and profitable when you use this strategy with higher time frame setup. Now let me quickly show you other example on our bearish setup, and let me call it a close. So this is our bearish setup on the Nasdaq E-mini future. So a future market. So when price creates a higher high, you take out this high, creating a higher high, and what do you notice happened? The price creates a retracement down, and create a retracement up, which is creating a swing high. But remember, this swing high could not be able to take out this our number 1 leg. But after that, you wait for price to take out this our number 2 leg. So let's see it now. So price creates a high, and price creates this high. Remember, it's let me show you. Remember, this high, it's number 1 leg. When price creates this our number 1 leg, which is the A leg, we have to wait for price to retrace down a little bit, and price is going to create a swing high. But remember, this swing high is a failure. When price creates this swing low, which is the B leg, remember, when price is creating the C leg, you cannot allow this swing this C swing to break out this A leg, which is invalid. But remember, price creates a swing high, and what do? You just make sure that once market break out this, which is the number 2 leg, and you just set target at least 3 to 1, depends on your choice. You place your stop loss either the swing A or the swing C leg, which is the number 3 leg, and you target 3 to 1. So do you see how precise this strategy is? Do you notice this strategy is very profitable? Not just profitable, it's a very high trend reversal. You can be able to use it when you don't have to use which is our classical trend reversal, which is this. You are going to be waiting for price to take out this swing leg, which is this. You waiting for price to take out this swing leg every time, know that you are going to be losing a lot of profit in the market. That is the reason why Laurelian's 1 to 3 reversal pattern coming, because it helps you to capture this trend before it's actually going to move in the market. Now this comes to the close of our strategy. If you are looking for a simple trading strategy, easier strategy that you can use for 2025 and beyond, that works every time, I will advise you to please subscribe to Traders Endgame, so that you get this new video which I'm going to publish, which is next week, and it's going to be one of the most powerful trading strategy, and it's going to involve our plans, our risk management, and everything connected to trading. that you can be able to use. It's a strategy plan, a trading plan that you can be able to use to become profitable all throughout 2025. So it's very simple. It's going to be using the Larry Lens concept. If you want to enjoy most of our profitable traders like Larry Lens, Larry Corner, Richard Wyckoff, and Jesse Livermore, and Tommy Williams, Vakintin Tap, and ICT comes in this channel. So please like and subscribe to Traders Engage. I will see you other time. Happy trading. God bless.